Welcome back. You're with us here on Pulse. MCX is looking to leave its troubled past behind and make a renewed push into the exchanges business. It's looking to raise around 300 crores in the coming quarters and is also talking to a set of foreign exchanges to offload stake. Saloni spoke to Saurabh Sarkar, the MD and CEO, and asked him about some of these plans. Listen.
The equity segment is a bit of a challenge because, as our experience after launching it shows, that it is quite capital intensive. So I think for now, as I said, our immediate target is focus on where we have a business and come to as close to operational break-even as possible. We are also in the process of raising capital, and that will probably help us have a better balance sheet before we can really focus our resources on the equity segment. And also it's important for us as a third player to understand what the market wants. So I think we want to keep our ears close to the ground. We're talking to our existing members, finding out what exactly is that they find missing in the current equity exchanges. And we would like to bring through innovation all that is missing, and so that create a better experience for all the members and really contribute to market development. I think be it financial inclusion or whatever other roles an equity exchange needs to perform, we would like to do in the best possible, most efficient manner. But it will take time. I think our first target is to come close to operational break-even, and then only we will be able to really focus on this segment.
Sir, as far as capital raising is concerned, immediately what is the requirement and where do you want to really use these resources at, and what is the long-term fundraising that you're looking at, and what is the tool that you would use?
See, if you really look at immediate, of course, as of today, my net worth is above 100, and that has sort of the reason why we were allowed to launch our contracts. But yes, I think by June of this year, we need to fund our clearing corporation with over 70 crores. We also would like to have some fixed assets like, office premises, etc. for that. So probably about 100-120 crores for the time being is adequate. But over the period of the next 2-3 quarters, we would like to have raise about 200 or 300 crores, so that we are very adequately capitalized both in the exchange as well as in the clearing corporation. And particularly since if you have to really go for the equity segment and try to again sort of create a business there, we need to have a strong balance sheet. So which is why, so I would be very happy. As step one, we get one institutional investors who can hold up to 15%, bring in some capital, then come with probably a rights issue so that our existing investors can invest some more, raise about 90 to 100 crores of capital in the next quarter or so, and then maybe over the period of the next 9 months raise 200 more. And I think after that, I can assure you we don't need any more capital for a very, very long period of time.
Yeah. So I would like to take that point forward on the promoter bit that you mentioned. So as far as promoters are concerned, are you looking at specific promoters for the exchange, be it either large banks or financial institutions, or even foreign exchanges as well, because that will gel well with your ideology and get in more expertise for the exchange?
Yes, certainly. See, I'm not sure if the word promoter is appropriate, because looking at the regulations, I don't think we can get a promoter. But yes, someone with a large economic stake, maybe something like 15%, though I'm not sure if 15% is large enough, but that's the maximum someone is allowed. So that's what I said. I think my immediate priority is probably to get a domestic institutional investor who can hold up to 15%. Foreign investment is an opportunity for us because 26% FDI in a stock exchange allowed, and we don't have any foreign investors. So I think that could be also an opportunity for our second round of funding. We are obviously in talks with 1 or 2 people, but I think that would take more time. It will be far easier to get a domestic investor as stage one. But yes, globally, if you look at the examples of the exchanges international that have done well recently, yes, I mean, they've all had as shareholders people who have a natural affinity or natural inclination towards the exchange business. I mean, be they large, liquidity providers or other exchanges. So yes, I mean, those sort of strategic investors always help. So that obviously is very much a part of MCX 2.0, as you said, to get in that sort of credible names on board. I think, one thing I want to point out is, while there is this talk about capital, etc., my priority is not really only to raise capital, because then I can actually issue shares to anyone. But I will actually like people to bring in, see, for us, we have had a perception issue and a credibility issue. So it's important for us to get the kind of shareholders who actually really wipe out whatever remains of the the perception or the cloud that hang over. So I think for us, more than valuation or the amount of money they're waiting, the kind of names that are coming in is important. And we're very happy if you see the people who entered the exchange as investors, the 12 new names. Some of them very credible names, the best investors in the Indian market. So we need more of such names. Hopefully some institutional investors, so that 15% can be given to them.
Let's take a break. Coming up, we take a look at the comparison between the Toyota Fortuner and the Rexton of Mahindra.